Louis, I thought it was really interesting because we saw US equities actually finishing near the highs of the day, even though we have Washington about to slap and activate these new tariffs on China. What's your take on the session overall?
Well, definitely, hi Dan, definitely we are seeing a response that has very little to do with what's happening with the companies. You know, it's become such a political environment in which every day you see a different directive concerning the trade war, tariffs, etc. So the markets are acting one way and the trend is completely different. It's a lot of uncertainty of what's going to happen tomorrow. Everybody's expecting eventually for both sides to back off, especially the U.S., but obviously, you know, from what your previous commentators have said, I mean, we're so close to the beginning of these that nobody wants to blink an eye.
So are you seeing any evidence that capital spending is being scaled back or postponed as a result of this uncertainty around the trade front, as the Fed alluded to in its minutes today?
Well, obviously, the U.S. is, by trying to make imported products more expensive, it is doubtful that it will create more manufacturing in the U.S. Manufacturing takes a long time to plan, and you have a differential in wages. So there is the feeling that there are no winners in a trade war, and hopefully, I mean, everybody will see the light and will stop. But right now, I don't see major investments derived from this supposed trade war.
So what do you think is the best strategy for investors then as they continue to navigate these headlines? Would you be taking some cash off the table and perhaps staying on the sidelines as the volatility maybe continues into the second half of the year?
You're absolutely right on the volatility, but there's so much liquidity still in the systems. You know, money is a commodity, and when you have plenty of it, it's cheap, and when you have little of it, it's expensive. So right now, there's a lot of cash-chasing opportunities, and they find the stock market to be one of the places to be. They are also waiting for rates to go up. Spreads between Europe and the U.S. are still very wide. That's why you see a lot of inflows into the U.S. You see low rates. Even after 2 increases by the Fed, you see the 10-year in the U.S. lower than it was before these 2 increases.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.